analyst expectations for Q3 on October 26th with another strong quarter of top-line growth, up 64%. But after more than doubling this year, shares sold off in the wake of the report. But the long-term outlook for Chegg remains encouraging, with the company's Q4 and 2021 guidance signaling more strong growth ahead. Here now to discuss the company's growth plans is Andy Brown, the CFO of Chegg. Thanks so much for joining me today, Andy.
It's great to be here, Alyssa.
All right, so we have seen quite a long track record of strong sales growth for Chegg. And this quarter, though, we did see the bottom line adjusted earnings slightly dip year over year. What would you say is the main takeaway from this quarter?
Well, the main takeaway from this quarter is that we continue to see strong growth, both from our subscriber base, which then obviously generates revenue growth. And we're continuing to see expansion of our margins. That's one of the things that, where I think we're unique. We're a high top line growth company. At the same time, we're seeing leverage on the bottom line. And so, that's, and we had the courage, quite frankly, to, take what we saw in Q3. And as you know, when you think about Q3, that's the time when school starts, so the beginning of a semester. That kind of translates into Q4. So it gave us the confidence to raise our guidance for Q4. And unlike most companies, we also gave us the confidence to provide our initial outlook for 2021, which we've been doing for, the past 4 years. This is the 5th year that we've done this. So strong Q4, nice guide up, another strong guide up for 2021.
That's right, which also beat analyst expectations as well. So let's talk about the remainder of the year. We know that 2020 has impacted every company in different ways. So Chegg has also seen that with its business. How have you leveraged what this year has thrown at you and fueled the company to make decisions that can set you up for more growth moving forward?
So what it's revealed to us, and it started in the middle of March, as you're aware, when the pandemic hit, and whether you're at work and you went home to work like you are and I am today, right? I'm sitting in my dining room, for goodness sake, because my wife occupies the office. But students also went home, and it's not just in the US; it's across the globe. So there were really two core dynamics that we saw as a result of that. And we're starting to lean into it from an investment standpoint. The first one is in the US, where that's been our traditional business, right? Has been in the US college students and to some degree high school and middle schools. But what we saw as kids went off campus and there were two things happened. They didn't have access to on-campus support because they're not on campus, big surprise. And the second thing that happened as they went off campus is that we saw, and one of the things that we'd seen for many years is what we call account sharing. And as they went off campus, it was more difficult to share accounts. And so that proximity sharing we saw. And so as a result in the US, we've seen an acceleration in the business where we believe it's a function of primarily account sharing that's not occurring as kids are off campus. What that did for us, however, was accelerated an investment that we were going to make in 2021 to have a technical solution, where the students couldn't account share. So if you kind of go back into the early part of the year and pretty much forever, if you were subscribed to Chegg Study, you could just share it with as many people as you wanted, as long as you were only one concurrent user on the account. So you could technically share it with 10, 20, 30 people, and they could share it. What we accelerated was a technological development that we call device management. That got accelerated. We introduced it in August of this year, August 17th, in fact. And so that limits, as kids go back onto campus, they can't go back to that old habit of, that proximity sharing. So that was one dynamic in the US. Outside the US, and this is where we'd been making investments really since the beginning of, 2019, well, we started making investments in international, both from a technological standpoint, content, and marketing. But what the COVID revealed to us as kids went off campus at that point in time is how big international could be for us. In other words, and so they found, we're an internet-based company, right? So the kids go offline and they go, how do I get help? I can't get help on campus. And we saw a significant acceleration in our international business. And what we've done there is we're also leaning into that investment. So we mentioned, not on this call as much, but on the prior call, the fact that we were increasing our investments both internationally and for account sharing. We believe that will continue to allow us to sustain high growth 2021, 22, 23.
Right. So it sounds like there are some short-term dynamics here in play with more students being remote and the expanding abroad. But from a long-term perspective, what about COVID-19 that has changed the business do you think is going to have those long-term lasting effects?
Yeah, so it's what we've talked about for many years with our investors, and that is that the inevitability of more and more of education going online, right? And so we believe COVID has accelerated that. I mean, it's and we can throw out a bunch of statistics, whether it's the professors who back in May thought felt like education, online education could be effective. Now, half of them think it is. So they're starting to turn that corner, and that's a stodgy group. I hate to say that, but they don't change much. And then when you think about the students, as the students are more and more going online and experiencing the online dynamic, 61% say that they believe a properly designed online course is just as rigorous as being on-campus course. So we believe there's this complete shift to where online education is becoming more and more accepted, and all we do is what? Online. So we think we benefit from it.
Right. Talk to us a little bit about the engagement that you're seeing with students and the increase in that, U.S. and outside of the U.S., because, that could also be a signal of stickiness, perhaps. What's your take?
Yeah, so that is one of the things clearly we made. It's not just about the number of subscribers we have, it's the engagement that we have on our platform. And the last 90 days, as it were, we had 252 million content views on our platform, which is, just stunning. And then one of the things that is really pleases is, and if you think about our platform, our Chegg Study platform, a big part of it is what we call expert Q&A. Right? So we have over 40 million pieces of content where students have asked a question, and then we have experts that answer it, and then it gets archived on our platform. 25% of all of the new questions that we had to answer came from international sources. So it kind of gives you an interesting dynamic into what's happening for us internationally, where 25% of our new questions are coming from international students. So yes, really high engagement on the platform.
And looking into next year, as we do see more students coming back to the classroom, how is Chegg thinking about incorporating perhaps some of these digital learning aspects either in the physical classroom itself or with more study materials? How are you thinking ahead for when that shift, back to the physical might happen?
Yeah, so as we think about as it becomes, we have more kids that are on campus actually learning, in-person learning, was what I'll call it. Because if you think about the dynamic today, there's a lot of kids that have gone back to campus, but in fact are not actually going to classes. They're actually doing it learning from their dorm room. But I do think what you're likely to see is what I'll call the new normal, because I don't think we're going to go back to the old normal. I really don't, whether it's in our work life or whether it's in education. I think you're going to have a new normal, and that's likely to be sometime, I don't think it happens any earlier than the fall semester of next year. It may even go into 2022, but I think you're going to see more of a hybrid model on campus, more likely than not. Students seem to want it. I think that, and for us, it really doesn't matter that much whether or not it's an online education experience or an in-person education experience. If that student needs help with their classes to better understand and master the subject matter, help pass pass a test or get a better grade in the class, online, offline, a mixed mode, it really doesn't make a significant amount of difference to us, because we're going to be there for them, and we're on demand, anytime, anywhere, any place service.
And you've talked about the international growth and the plans there. You've also talked a lot about college students. So would you say those are kind of your two main areas of focus right now? What about other either verticals or markets?
Well, there's a couple of things that we haven't talked about, interestingly enough. So what I've been talking about is what we call Chegg Study, or our Chegg Study Pack. And what, we have other parts of our business that actually address a younger demographic. College students to be younger demographic, for example, on our writing tools properties. We've got 30 million students that are actually accessing our writing tools properties, and it's a freemium model. So part of it's ad supported, part of it is then you upgrade to a subscription, and that goes all the way down into middle school. And so that service actually helps students, create a citation. You upload the paper, you create a citation, get a citation, create a bibliography, and that's for free. And then they can upgrade to a subscription that allows them with sentence structure, grammar, and things like that. So that goes into that demographic. And we've had that service for some period of time. The other part of our business, which is much newer, right? So what I've just talked about is academic learning. And so one of the things we moved into a little bit under a year ago was what we call skills-based learning, because we do believe, and if you look at any employer data, they're looking for skills. It's not necessarily about whether or not you have a degree. Do you have the skill to get that job completed? And so we acquired a relatively small company I guess it was October 1st, so about a year ago, called Thinkful, where we've branched out into skills-based learning for those people that want to either reskill themselves or get a new skill into things like coding and things like that. And that's a business that we recently moved into, and we believe over time that will likely be a big growth area for us as we develop it.
Is that the area that you see as the biggest growth opportunity for the company in 2021, or what segment would you say provides that biggest potential for growth?
Yeah, so without a doubt, the biggest potential for growth is going to be on the academic side. The type of growth that we're seeing in our student base, both domestically and international, will be from an overall standpoint the largest. But we do believe if we imagine Chegg 5 years from now, so let's just imagine Chegg 5 years from now, we do believe we'll have a skills-based business at scale. It's not at scale today, but we do believe, and those are the investments we're making, because we're not trying to create a one-quarter company or a one-year company. And we talk about this internally. What we're attempting to do is create a 100-year company. And so you have to make those investments early for those future growth opportunities.
Now, when it comes to competition, I think that all speaks perfectly to this. How do you stay ahead of the competition and think about it in the context of the different markets that you're playing in?
Well, you've got to continue to innovate, right? And that's one of the things, when I think about what we have done over the last, 7 to 10 years, we've really defined a market. If you take a look in the public markets, which I'm sure many of your viewers are in, I would beg to ask the question: how many companies, education companies, ed tech companies, or even broadly education companies, are actually focused on direct-to-student relationship and selling services directly to the student? I can't think of one. So we are a pioneer in our space, and to continue to be that pioneer and continue to get our, I'll call it, unfair share of the market, which is what we want. We've got to continue to innovate. And so when I look at our core flywheel, which is Chegg Study, and I always like to talk to investors about it. Think about Chegg Study, which is a $14.95 subscription product, and we've got literally millions of students across the globe using it. Think of it as like Amazon Prime, right? You can relate to Amazon Prime, and you may not recall, but I recall when Amazon Prime first came out, it was just 2-day shipping. It was a very simple service. Well, if you think about Chegg Study 7 or 8 years ago, it was a fairly simple service. It was textbook solutions. But if you think about Amazon Prime, it's much more than 2-day shipping today. They became TV shows, then original content, then music. Amazon Fresh kind of do all of things, and they've added capability. Same thing with what we do we have done, and we will continue to do with Chegg Study, and that is we've gone from textbook solutions to expert Q&A to assessments, to practice tests, and we will continue to add to that capability where we create this incredible moat where for somebody to replicate it would be very, very difficult. So it's that innovation, like I said, once again, much like an Amazon Prime, that we continue to innovate in the education space.
Well, that's definitely a very interesting way to frame it. And thank you so much for your insights today. It was great learning about Chegg, and we look forward to seeing all of these growth initiatives in action. Thanks again, Andy.
Thank you, Alyssa.
Hi there. Thanks so much for watching Investing Strategies on our YouTube channel. If you want more executive interviews and analysis of key trends to watch, make sure you hit the subscribe button so you can stay up to date.